Good evening, guys. My name is James from Varsity Unlimited Tutors. I believe we have met each other when we were doing our first year, and now we are getting into our second year. So most of you, I believe you saw me on Thursday when we were doing business law, and today we just want to introduce taxation. So like I highlighted on Thursday, we are going to be doing some introduction classes for the different modules that you guys are doing. And then after we are done with the introduction classes, then we'll be sending you guys some recordings for the different study units so that you can get assistance with your study modules. Then in addition to that, we are going to be doing the assignments together and the KCQs together and the exam preparation together as a team. And like I highlighted, the cost is 700 Rand for each module that you'll be doing, and installments are allowed. So what I want to do today is I want to leave the time to Mr. Listen. Mr. Listen Timire is the one who's going to help us with our individual taxation. He will take also other modules such as costing and etc., but we will cross the river when we get there. But for now, I just wanted him to give us just an introduction of what our individual taxation is all about, so that we just have a brief introduction about it, and then he will start sending us the videos for the guys that would have that are interested and would have paid for the lessons. Right. So the recording of this one, I'll send it across all of the groups so that those of you that could not attend can still have the information that you require to make your decision. I'm sure Mr. Listen will introduce himself, we'll talk about his credentials and whatnot, but he's a very good friend of mine, and he has been helping me with taxation for the past, I think, almost 4 years now, and he's very good at that module. I'm sure you are in very much capable hands. If you've got any questions for either Mr. Listen or for me, you are free to ask them. This lecture will be probably 20 to 30 minutes. It won't be long, it's just an introduction, probably 20 to 30 minutes long for us to just familiarize ourselves with each other before we get into the semester. Mr. Lesson?
Thank you, Mr. James. I'll just turn on my camera so that everybody can just see that there is a human being that is speaking. So, guys, it's good to meet you all, guys. I just want to ask Mr. James to confirm if you can hear me and see me.
Yes, we can hear you, and we can say you it's fine.
All right. Thank you so much, Mr. James. It's actually a pleasure to be here this evening and meet the guys. How are you guys? I hope everybody is well. And today, actually, maybe I should just start by giving you the background of who is listening to me and why, actually, we decided to start with the taxation module in individuals specifically. So guys, my name is Listen to me, as Mr. James is already introduced. And yeah, right now I'm in my third year of training at SNGGT. Basically, I wrote my CTA, my honors in accounting in 2021, and and then I wrote my first board exam in January of 2022, which is the ITC. And then, actually, right now, as we are speaking, I'm counting down on the results of the PC board exam. So basically, by the end of this year, all goes well, I would have qualified as a CA. So generally, guys, let me just quickly maybe turn off my camera so that we can save the bandwidth. But I hope everybody is well and that you are looking forward to this year, guys. I'm very excited actually to be kicking off 2024 with the taxation class. I'm actually sure that we'll see each other and you will see me often in many other different subjects. But then, yeah, so for today's purposes, guys, I just wanted to introduce you to you guys that actually and tell you the background why, basically we have like the module individuals as in taxation, and actually basically, what you actually have to expect when we think about like taxation of individuals. So guys, I would like all of us guys to actually pay special attention when it comes to taxation, because like, as you all know, guys, taxation is basically legislative driven, which means that you gotta know your principles and you better know like the scope of particular sections and their implications thereof. So guys, it is very critical and very important as the taxation class that, we actually have the foundation, or we actually build the foundation that would enable us to actually pass taxation into the future. This is not only for you to pass the mod in the current year, but actually to set you up for success in the future. So, I've always believed, guys, that, in my life, actually, the success or the progress that I've made so far, I've always attributed it to the, beginning, or to the years at the beginning of my courses of the programs. Actually, the way you view taxation actually has a lot to do with how you are going to take it serious at this point in time. And actually, at this stage, when you are actually still doing taxation 2A, you will see that when you get to taxation 3A, when you get to taxation 4, when you get to honors, when you get to, doing your board exams, if you're going to want to follow the CA route, you will see that the foundation that we would have set at this point in time is actually what sets you up. It's what actually differentiates you from everybody when you are now going into the later years. So it is important and imperative actually that at this point in time, and actually at this stage, while you are still doing taxation 2A, guys, that we actually pay special attention. As most of my time, like actually, maybe I should just let you guys actually know the tip that most of my time that I'm gonna spend with you guys, I'll actually be spending it breaking down the underlying principles, how you can do well in a taxation assessment, how you can actually master the tax principles, how you set yourself up to actually passing taxation even in the future by just knowing a few basic principles that sets your mindset up for how taxation is built. So basically, we are going to introduce, each particular section that affects, for example, in this module, like that affects an individual taxation, and then we are actually building the foundation of what you have to expect into the future, of what you have to expect, what you have to know, what are the basic underlying principles that governs your individual taxation. So it is very imperative, guys, that at this point in time that you actually pay special attention as we are going to actually introduce the taxation of individuals. So without wasting much time, guys, like I think I should just get into some a little bit of, not really detail, but a little bit of basics with regards to what you need to expect when we are talking about the taxation of individual itself. Guys, I want to speak to these things as well, like in line with your study units and with the line with the things that you are expected to know at your stage. So I would like to maybe share the screen so that I can just project your study units, guys. This actually the summarized version of it, so that we can actually see what you are expected of, and then I'll actually just basically break it down actually for you to see what to expect in the audios and videos that will follow this introduction session. And I believe, guys, that it is imperative that you actually pay special attention today, because as I am going to introduce these things, guys, it serves as the basis for you to actually follow as we're going to actually unpack each study unit and as into the future. So guys, I'm very happy to be here tonight, and I think I would actually enjoy spending or actually walking this journey with you. So let me just share my screen with regards to your study units, guys, and what you need to expect from the individual taxation perspective. Mr. James, can you confirm when you can see my screen, please?
Yes, we can see it.
All right, thank you. So guys, this is taxation 2A. I am excited to actually, be talking about individuals because, one thing that like makes me excited when I'm thinking about individual and also said at the very same time is because like as a person, I am an individual and it so like the taxation of individuals actually resonates with everything that we are facing into our everyday workplaces and everything that we see in our pay slips and stuff and see so much taxation that has to be taken out of the individual. But what actually builds up the taxation of an individuals, what do they take into account, what we need to bring into perspective, guys, and be practical about it actually from the perspective that you understand yourself as an individual. Actually there is there has been a topical issue that has been happening lately when they were talking about like individuals being taxed at the very highest level in South Africa. If you think about it, guys, as individuals, we are basically taxed on a sliding scale, as you all know. Like I think, this is something that we may be familiar with, that we are taxed on a sliding scale from 18% to 45%, and companies are taxed that right now. The tax rate is 27%, and as an individuals actually earns like more into the future as you grow as an individual, and as your salary basis or as your income base increases, the tax bracket that you end up falling into actually, makes it hard for individuals, because like just think about it, out of your earnings you have to pay like more than 45% of your income to SARS in the form of taxes. So it's something that like when we're thinking about, when you're looking at your pay slips and you're looking at okay, at the same time as individuals, we are the ones that are going to pay when you get your pay that is already taken, that is already after tax that has been taken, like after you've already paid payee, for example, you now go and pay VAT out there. Out there, when you go to the grocery shops, if you look at your slip that you get, you see so much money that you have paid into the VAT that you pay in the shops there as you buy goods and services. So you see that it's another further taxation that is imposed on individuals. So when you're looking at an individual taxation, guys, it's a very interesting and it's a very topical thing. And I think the most important thing that we need to think about from that perspective, guys, is that like, this is going to be a funny module, but then like the principles thereof are actually very important and actually fundamental for you to do well in taxation, not only in taxation 2A, but actually up until you actually write your board exams into the future. If up until you have to write your honors, your postgraduate diplomas in the chosen field that you're gonna do, guys, it's important that you have these fundamental foundational principles of individuals. And the first basic foundational principles of an individual, guys, is actually from the perspective of what gets into the income of an individual. What is income of an individual? Basically, what is the income that you expect to see in the individual's taxable income, and what are the implications, what are the exemptions that an individual can get from SARS? Because we're going to have some reliefs, guys, from taxation. Otherwise, individuals are just going to be left with actually maybe half with the government. So there got to be some reliefs that we receive from SARS from that perspective. So guys, I was looking at your module guide. I was looking at your module guide. And then I was like, okay, what is actually within the scope of individuals for these guys? What actually from that perspective is something that they are required to get through? What are you guys required to know from the taxation 2A perspective? And then I realized that actually most of the interesting stuff for individuals actually are introduced in this small text 2A. And I'm actually very, 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 very excited to see that most of the things that are actually topical and affecting individuals out there, they are being pulled through into perspective in this module. And I am happy, and I'm actually thinking that, we should actually start with, the very exciting content. So guys, the first important thing to know about individuals, guys, is that, the gross income definition, whether it's an individual or it's an company, it does not change. Gross income is gross income. What is gross income? Basically, it's like, the gross income definition is actually defined in your act, but then what is not defined is some things that gets into your gross income definition. For example, what they tell you guys is that, what is gross income? They tell you that gross income is like a total amount, that an individual receives or a company receives in cash or otherwise, which means it doesn't have to be cash. It doesn't have to be anything. It just have to be something that you can ascertain, that with an ascertainable monetary value, in cash or otherwise, received by or accrues to during the year of assessment. That is not a capital in nature. So basically, when you're thinking about gross income, guys, you're thinking about all the accruals, all the receipts that you get as an individual, be it in cash or otherwise, which means that it doesn't have actually to be cash. It can be anything that you have received. It can be something that is deemed to be a receipt from that perspective, which means that, your gross income includes some other things that you may not have expected to include them, because you did not have, or actually you did not receive actual cash flow from those things. But then what we need to think about, guys, is whether those things are actually revenue or capital in nature. Actually, to give that into perspective, guys, it's for something to be revenue in nature from the gross income perspective. Actually, it has to be something that, is coming out of the work you have done. So, for example, if you have rendered certain services to receive in exchange for receiving a certain or a particular income from that service, then that thing is generally revenue in their nature. But if you receive some money, for example, for disposing an asset is not something, is something that you were holding, and then now you are disposing it. So by disposing your asset, you did not actually render any service that made you eligible to actually have a revenue income. Actually, you just disposed a capital asset that you have. So those kind of receipts, guys, become now then they fall into what we call capital receipts, which would be subject to capital gains tax. When you go to your unit 7, you realize that what actually results in capital gains tax is your disposal of assets, of course, subject to certain exemptions that we are going to discuss when we get to Unit 7. And then, guys, another quite interesting thing that we need to think about when we are thinking about individuals is that individuals has got some special exemption that they get from income tax. So, for example, what we can talk about is that income that would have been generally included in gross income may end up actually being exempted from tax, because for the fact that you are an individual. So, for example, when you think about it, for example, when you think about the taxation of interest, for example, let's think about the interest from a local source, interest from a South African source. You know that from that interest that you receive from a South African source, guys, you're gonna get some exemption that you get. Like, for example, if you are older than 65, let's say you have that 34,500, and if your age is actually below 65, then you get that you know, 23,800, that like exemption that you get from that income. So those are kind of exemptions that are particular to an individual. Let's think about, like, guys, if you let's say, for example, you've got your fixed deposit where you are actually saving your money, guys. Let's say you're saving your money in your fixed deposit. When you get some money, you go and save it somewhere in a fixed deposit, you earn interest there. Those kind of things, guys, like, you know, they fall in the bracket in what they call tax-free investment. Of course, those things will be subject to limitations that we are going to discuss when we go to that specific unit. But, you know, those are kind of an example of actually expenses that you would expect to be exempted from normal tax when you are an individual. So the basic that I'm trying to actually uncover here from this perspective, guys, is that when you are thinking of an individual, you are basically thinking about a multiple, we were basically thinking about multiple implications that could come from taxation perspective just because you are an individual. And then we go to the another unit, guys, that you're going to have to cover. That covers, like, you know, the deductions you are going to have. Obviously, that deduction that you are going to have, they are not specific to any individuals. The deduction that you're going to have, they are also applicable for a company. But then also, you need to think about, like, you know, okay, there are deductions that are particular to any individual, which means that even if that deduction would be, like, that deduction that you are going to get may not have been allowed as a deduction, for example, from the company perspective. So I want to introduce to these things, you know, at an overall level, to say some of the deductions, some of the things that we're going to do under individuals are going to be concurrent, or actually they are going to be on par with how they are treated when you are talking about companies. But from this perspective, what I want you to understand, guys, is that, like, you know, from the general deduction perspective, from the general deduction formula, you need to think about, like, you know, what are the expenses that individuals incurs in the, for the purposes of carrying on their trade, or actually in the production of income, or those expenses that they incur for the purposes of carrying on their trade and that are in the production of income. And those expenses are not capital in nature. You know, when they are not capital in nature, those kind of expenses, then you are allowed to deduct them from an individual perspective. Let's say, for example, you guys, like, you know, you are running a business. Let's say you are running a coffee shop, you know, and you have to actually acquire some coffee from somewhere, maybe from Checkers. You know, that coffee that you're acquiring from Checkers is going to be allowed as a deduction, basically, from the general deduction perspective, because, like, you are acquiring that coffee to use actually to make coffee at your coffee shop. So it may be allowed, actually it will be allowed as a deduction. So it's not of a capital nature, because it's something that you are getting to actually, make, or actually to produce your product that you are going to sell. So something that will be capital in nature, guys, like I explained earlier, could come from, like, you know, you purchased, let's say, for example, you purchased an office building. Now your coffee shop is growing, and now you are purchasing a building, or a place for you to do your coffee shop business. Obviously, that will not be allowed as a deduction, guys, because you are actually acquiring an asset. That asset, though you are going to use it in your business, but you are going to use it for a very, very long time. It's not something that is being consumed, basically, in your business. So if it's something that is not being consumed in your business, it means it's a capital asset, which are you going to use for, like, more than one tax year, which means it's only going to be allowed allowance over a period of time from SaaS perspective. And then you guys, you may understand that, you know, from that perspective, those kind of things, those kind of, like, assets, those kind of, like, you know, activities would not actually render, you know, a deduction from the tax perspective. And then you think about from unit 5 perspective, guys, and, like, you know, we are gonna come and bring some exciting news to you guys, where we are talking about, like, you know, things that, you know, you guys will, things that you guys will actually be more, I think you'll be more interested about this. Even me, like, you know, I am interested about, like, talking about, like, you know, some fringe benefits. And then what is a fringe benefit? Actually, a fringe benefit, you know, if you think about it, is something that you get, you know, as a result of employment. Let's say, for example, something that you are getting in addition to your normal salary and to your normal remuneration that you are getting from a company. Then a company is giving you some added advantages, you know, some added advantages that are linked to your employment, basically. So what happens when you are getting those added advantages that are linked to employment, guys? what happens there is that SARS would come and say, no, guys, this amount that you are, whatever benefit that you are giving to an employee, this benefit, if it was included in your salary, it was going to be taxed. So SARS is going to deem that to be a taxable benefit. So therefore, what we are talking about when you're talking about infringed benefits, guys, we're talking about that maybe the company is paying your medical expenses, maybe the company is paying your pension, fund or something. Maybe they are contributing to a provident fund on your behalf. Maybe the company is giving you a company car, or maybe they are allowing you to claim, like, some things when you're using your private car, all those kind. Or maybe your company gives you a loan. Let's say, okay, this is a practical, real life scenario. Let's say, for example, you are an employee and now you are stuck at the middle of a particular period, guys. You are stuck. You no longer have like finances to get through to your month end, for example, and then the company gives you some money, gives you some advance, basically, and then they are like, okay, you're gonna give us our money back, we're gonna take it on your salary as when like comes month end, which means, but this amount that they gave you maybe does not have interest. If that amount does not have interest, guys, that interest portion that they didn't give, that they didn't charge you, becomes a fringe benefit, because the thinking behind that is that if you have to go to a bank to get that money to survive through to the end of the month, you are going to be charged on your overdraft facility. So that benefit that you get from your company is a benefit that you get as a result of employment. So therefore, it falls within the ambit of fringe benefits. And fringe benefit, guys, there are specific rules, obviously, that apply to fringe benefits. But generally speaking, this amount that you receive, or these benefits that you receive in cash or otherwise from your employer, they are actually included in your what? They are actually included in your gross income. Of course, there are certain exemptions that you would get, that you would see in the videos that will follow, where we are unpacking actually, the particular benefits that you are going to get, the particular deductions and exemptions that you are going to get from this deeming provision relating to fringe benefit. And then, guys, and then you will see that, like, while we are still speaking about individuals, you see that, like, under Unit 6, guys, you see, like, we've got the retirement benefits from that perspective. And then the retirement benefits, guys, is that, as a company, there must be some, some form of security that they have to give to the employees. When you retire, for example, when you reach the age of 65, you might want to get some money that is saved somewhere, that you may get either as an annuity, which means yearly into the future, or as a lump sum as you retire, so that you can kickstart, guys, as you retire. Otherwise, when you are done working and you don't have any money, it's going to be a struggle. So therefore, the companies now, they introduce what they call like the retirement benefits. This way the companies actually contribute on your behalf. So those contributions that they make on your behalf, and the contribution that you make to the retirement funds, guys, they are actually specifically allowed as a deduction from a normal tax perspective. Those contributions that the company is making obviously would become a fringe benefit, because you're getting that contribution as a result of your employment. And then the contribution, the total contribution that you are making is allowed as well as a deduction, including the contribution that you are making, because actually SARS is in the cognizance that it needs to encourage people to actually save for their retirement, so that, because remember, like the old age, the government would have like a lot of problems if the old age does not have shelter or money to use on their daily basis. So they are actually attempting to encourage people to actually save for their retirement. So therefore, they bring some deductions in terms of Section 11 Cap F, where they are talking about, like, okay, the contributions that the company makes and the contribution that you make as an individual to actually to your retirement funds, we are going to allow it as a deduction from your income tax, from your taxable income. And then this comes, guys, as like, an encouragement, basically, for you to contribute to this, thing. But these contributions, or this deduction that you are going to get, these deductions are subject to limitations, guys. For example, as I think you know, like, when actually you are familiar with Section 11F, that talks about the contribution that you're making to a retirement fund, for example, that contribution, you're only going to be allowed it as a deduction to a particular limit. For example, the limit, they give you some limitation, rules that are gonna be applied so that people do not abuse these retirement funds, do not abuse this retirement benefits thing. Now you are going to contribute your entire salary there, and then you are running away from taxation. So therefore, that's not going to be allowed. That's why they put some limitations so that they avoid such things. So those kind of actually limitations and those kind of unpacking that section 11 KF, we're going to have it in detail in the unit that covers the retirement benefits. But this is just an overall introduction to the units that may be covered, that will be covering in detail in the videos that would be shared by Mr. James. So actually, now when we're thinking about unit thing 7, guys, when I'm thinking about a capital gains tax, we need to think, what is capital gains tax? We're trying to think okay, why is the capital gains tax necessary? This thing is taxed in terms of the 8th schedule, of the Income Tax Act. So in terms of the 8th schedule, guys, they introduced something called capital gains tax. The reason for that introduction of that chapter, guys, I just want you to understand that capital gains tax, it basically means that on your assets that you are acquiring, the SARS is not allowing you to deduct those assets from gross income. And those assets that you sell, SARS is not going to allow you to include those proceeds to gross income because they are capital in nature. Remember, in our general deduction formula and in our gross income, we said items that gets in our gross income or that are allowed as a deduction from our gross income are, generally speaking, items that are not capital in nature. So capital assets, this is where we're talking about the capital assets that you were holding as a business. Let's say you are holding an asset that you are using in your business, like for example, a motor car. For example, if you purchase that motor car, you are not allowed to deduct that in terms of the general deductions formula, because that asset is capital in nature. You're going to be using it over a long period of time. And then for that reason, that asset is not going to be allowed as a deduction from the tax perspective. So you are going to have that asset. You are going to keep it in your business. But maybe at some point, guys, you sell that asset. Now you have acquired that asset, maybe let's say for example's sake, we say you acquired that asset for 100,000, and then now when you sell it for 150,000, and the SARS says no. When you acquired this asset, it was 100,000. Now you are making a gain from your disposal. So that gain that you are making, we are going to tax it. So that's what brings into effect schedule, guys, with respect to capital gains tax. Basically, what it entails is basically that the profits and the losses that you are making from the disposal and the purchases of assets are going to be taxed with the special taxation rules that are not a part of gross income rules, because they are capital in nature. So hence the introduction of the 8th schedule. And then in terms of that 8th schedule, guys, there are specific implications that comes for individuals. Those specific implications that comes for individual, guys, that differs from companies, is actually to give some relief as well to individuals. For example, guys, if you sell your asset, if we sell your asset at a profit, for example, SARS is not going to take all the profit and say, no, bring this profit and put it in gross income. No, they're going to give you some exemption. They're going to give you some, an inclusion rate. As we all know, as we stand right now, if you make a profit, the inclusion rate you're going to be, you're going to put that profit into taxable income for capital assets is 80%. That 80% is actually to try to make it easier for individuals, because these assets were never allowed as a deduction earlier. Maybe you were getting allowances in terms of other sections, but as you dispose this assets, SARS does not want to benefit from the entire disposal. It's just saying, okay, you are going to only include 80% of the capital gain that you're going to get. And then they tell you that, okay, as an individual also, you have got an annual exemption. For example, there is an exemption that you get as an individual. Let's say you dispose your assets during the year, and your assets that not exceed exceed, the profit that you make does not exceed 40,000, you are not going to be taxed from the capital gains tax perspective, because actually there is an annual exemption of 40,000 from the capital gains for individuals specifically. This is not applicable to companies, and it is actually specifically sections that are actually in here to help some individuals to actually not have too much tax burden. So actually, also another thing you need to understand when you think about capital gains tax is that as much as capital gains tax is taxed, the capital loss is not allowed when you like to be set off against other income. If you make a capital loss, for example, in the current year, let's say, for example, you acquired your car, and then now you sold that car at a loss. That loss is not allowed to be set off against your taxable income. It's only allowed to be set off against your other capital income. So otherwise, maybe you carry it to next year and you sell another asset that has a capital profit to set off against that capital loss. So it's not allowed to set off that capital loss against other revenue income that you are getting. So it is important and imperative that you pay special attention to this, as we are going to unpack capital gains tax in Unit 7. And then, guys, on our last point, we are now just going to talk about, like, what are the expenses and the income that are actually specifically for individuals. What are their expenses and income that they are going to get, actually, and what are their income that is deemed to be gross income? What are the expenses that are just deemed to be deducted? Because remember, like, from that perspective, there are expenses that even if they are capital in nature, you may be allowed as a deduction because of a particular provision that is given in the Income Tax Act. Let's say, for example, you've got like your asset that you're using in the business, and then that asset maybe get into an accident, or maybe it has got a scratch that it has, and you want to fix it. Maybe you want to repaint it. You are repainting a capital asset, which is comes as a maintenance. The maintenance that you're doing the capital asset is basically capital in nature, but then SARS says no. We want to actually give reliefs to these individuals. We want to give reliefs to the taxpayers. The cost that you are going to incur to maintain your assets, they are going to allow them as a deduction, even though they are capital in nature, because these are things that are allowed specifically in terms of the Income Tax Act, according to some other sections that override the gross income general formula. So, guys, from that perspective, we have got different things that we're going to incur, or that we're going to discuss about individual. Let's say, for example, as an individual, you understand that after you've gotten your taxable income, obviously you use your tax tables to actually calculate your tax liability. And then from that perspective, after you calculated your tax liability, you go down and actually try to think about, okay, what are other exemptions that the individuals get? Let's, for example, you're talking about primary rebate, the rebate that actually SARS is just saying, okay, if the individual does not make an amount that's more than this amount, if the individual's taxable tax liability is not more than this particular amount, we are not going to tax this individual. And then there are also some deductions that you're going to get, guys, with regards to your tax contribution actually to your medical schemes, with regards to the expenses that you're going to incur for the purposes of upkeeping yourself, with regards to your other medical expenses that you're going to incur in terms of Section 6A and Section 6B. You are going to get certain deductions that you're going to get. And those deductions, we're going to unpack them and actually explain to you guys what are the implications to your taxable income with regards to those kind of things. So, guys, after having said that, I understand that, like, there are quite a number of things that, like, I may have skipped from this conversation, just to actually not take too much time in this discussion. But, from the videos that we are going to actually roll out, we are going to roll out the videos that would particularly unpack each section, particularly unpack each unit that relates to the individual taxation in your module, guys. Like, that would make sure that at the beginning, at the very minimum, you must have the basic understanding of the taxation of individuals. We are going to specifically focus on the implications that certain paragraphs and certain sections have got on the taxation of the individual themselves. So I think from that perspective, guys, for tonight, I just want to say, you know, I am looking forward to actually, you know, interacting with you guys more. I'm looking forward to actually unpacking taxation more with you. I'm looking forward to actually, you know, share some practical, you know, knowledge that you may guys need. That actually we have gained over time as we were facing these daily or day-to-day issues, or like, you know, in our daily lives and at work, you know, in our professional lives. So it is important that you guys keep in touch. It is important that you guys, you know, you actually, you know, keep in touch with Mr. James, so that we will interact more, so that we will interact often, and we will give you the basic principles that you need to understand. We will give you the basic principles that you need, not only for today, but also in the future. So having said that, guys, let me not take so much time from you guys. We will actually have meet again in other modules. So thank you so much, guys. At this point, I would say goodbye, guys, and I'll give this time to Mr. James. Thank you, Mr. James.
Okay. Thank you, Listen, so much. I think that was really like a comprehensive cover-up of everything that taxation will cover. Like I said, guys, he will be sending videos each and every week on the different units that you need to know on taxation. So I would urge you to make sure that you make your deposits, and then I will give you access to the videos that we'll be sending. Then in addition to those videos, we are going to do the assignments together. We are going to do the KCQ together, and then we are going to do exam preparation for past exam papers together. And I believe that should suffice you to have a very good mark for your exams. If there are any problems that you face, as always, feel free to call me or send me a message in the WhatsApp group. I will advise the date when we are going to meet for concepts of financial reporting and also for cost and management accounting. But I believe everything should be fine for now. Thank you guys for coming in. I'll send the recording in the group and we shall talk later. Good night.